We detected an unusual trade worth $29.5 million on super microcomputer stock, ticker symbol SMCI. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying super microcomputer or bearish and selling. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. And so to level the playing field, we track the trades of the rich on this channel. With that being said, let's dive into our data analysis to uncover how this wealthy investor is trading SMCI. As we can see here on the options time and sales tape, the most unusual trades happened on February 19th at 11:24 a.m. at the 35-second mark, for these April 17 options at the 40 strike calls and the 57 strike calls. 25,561 contracts being traded together as an options spread strategy. Now, we need to be very careful with this type of strategy, especially regarding the 40 strike calls, because when we dive deeper into the data on the option chain, we can see here for the April 17 options at the 40 strike calls, we have an open interest of 31,894 contracts, which is more than the 25,561 contracts being traded. And so, based on our analysis, this wealthy investor was closing these options to take profits at the 40 strike call. Now, how do we know this? Well, because we have been tracking this wealthy investor's trade since last week on February 11th. You can see here from the historical data on February 11 for these April 17 options at the 40 strike calls, a large volume of new trades by this wealthy investor were being made when the open interest was only 4,387 contracts. And so you can see here on the charts, February 11 is when the stock was trading at about $40 per share. If you knew about this unusual trade, you could have gotten in even on February 12 or 13 before it took off and gained more than 70% to $60 per share now. And so we did email our members last week about this unusual trade. As you can see here, this was the email we sent to members alerting them of unusual option activity detected on February 11. And we can see for SMCI, we also got into these April 17 options at the 40 strike calls for a price of $8.85 last week. And so we can figure out how much profit has been made, because if we go back to the options time and sales tape, we can see that the 40 strike calls were closed for a price of 22. Keep in mind that options are priced per share, so we need to multiply by 100 since each options contract represents 100 shares of stock. And so each trade costs $2,200 each. And so we subtract the initial cost or price of $8.85, which is a profit of $1,315 per contract. And to get a profit percentage, we divide by the initial price of $8.85 and multiply by 100 to get a percentage. And so we gained 148% profit in just 1 week. And so this is another real example proving how we keep winning with our data analysis. So if you're tired of losing, or maybe you're not losing, but you're not as profitable as you would like to be, then you can get access to these very insightful trade alerts made by wealthy investors who have a lot more resources to find out when a stock is about to make a big move. No wonder the rich get richer. And so we'll put a link to our website at the top here where you can get access to better trade ideas with a higher chance of profit. Because keep in mind, not all of these unusual trades will be profitable, But as long as we diversify our portfolio with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Now, back to our analysis of this unusual trade. After closing out of these 40 strike calls, is this wealthy investor still going long bullish on SMCI? Based on our analysis, we believe so, because the 40 strike call options were rolled to a higher strike price, and so they are still in this trade, which means that these 57 strike call options are the new open trades. And so we can calculate the total cost of this new trade, the price of 11.55, and since there was a quantity of 25,561 contracts, we multiply that out and we get a total of $29.5 million for this new trade. But SMCI has already gone up a lot, and so this is a higher risk trade in comparison to the trades that we share on our website, with a lower risk and higher chance of profit. And keep in mind, this wealthy investor locked in a lot of profits already. The cost of this new trade is less than the profits they made from the closing trade. And so if the stock goes down, they do not have the risk of having a losing trade anymore. And that is why we also locked in profits and rolled our options into this new trade. For the April 17 options at the 57 strike calls, since this was the new opening trade, we also traded these call options and got into the same position here. POS stands for our position, and the green color means a buy position, while a red color would mean a sell position. Now, how did we know these were the new opening trades? Well, notice that these options have an open interest of 701 contracts, much less than the 25,561 contracts being traded by this wealthy investor. In other words, it would not be possible to close out of that many contracts if there are not enough open contracts available. This data is very important to figure out, because if a wealthy investor is closing their trade without opening a new one, then it may signal that it's time to hold off rather than start a new trade. And so we always take this extra step to analyze the data at a deeper level, because many other websites and scanners don't. They report all high volume unusual trades without filtering out closing trades, which leads to inaccurate results and losses for those following unusual option activity. And that is why we have more winning trades than other websites. And so, based on our deep analysis of many variables and other data sets, which we do not have time to cover in this video, this wealthy investor bought the 57 strike calls for $11.55, the same price as we calculated and saw earlier on the options time and sales tape. And so when we analyze this trade, you can see here on the risk profile profit loss graph, where the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Note the zero break-even line here. And so when the purple line, which represents the current date, and the blue line, which represents the option's expiration date, are trading above this zero break-even line, this trade becomes more positive profitable, because this is a long bullish trade. And so if the lines are trading below it, this trade becomes more negative, loss. But remember, in our case, we closed our 40 strike call options with a substantial profit and used some of those profits to get into this new trade at the 57 strike call. And so even if SMCI goes down, we will not have any negative loss, because we've locked in more profits than the cost of our new trade. And so by managing our trade, we reduced our risk, while at the same time, we could make more profits if the stock continues to go up higher. This is why we always manage our trades to gain an edge in the markets. If you want to learn more about how we beat the stock market with our trading strategies and how we further reduce risk to increase profits, then go to our website. We'll put a link here. Let us know in the comments below Do you think supermicro computer stock will continue to go up higher? Or do you think it will crash back down? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.